How to invest in derivatives for beginners. Welcome to Be a Baby Billionaire. Are you looking to expand your investment portfolio and explore new financial opportunities? Look no further than derivatives. These financial contracts may seem intimidating at first, but understanding the basics can open doors to potentially profitable investments. In this video, we will explain the fundamentals of derivatives and guide you through the first steps of how to invest in derivatives. From futures contracts to swaps, we'll cover the most common types of derivatives and equip you with the knowledge and confidence to start investing in this exciting market. So let's dive in and discover the world of derivatives together. 1. What are derivatives? At their core, derivatives are essentially financial contracts whose value is derived from an underlying asset, index, or benchmark. Imagine a chameleon, capable of changing its appearance based on the environment. Similarly, derivatives adapt their value from the fluctuations of their underlying entities, such as stocks, bonds, commodities, interest rates, market indexes, or currencies. There are several types of derivatives, with futures, options, swaps, and forwards being the most prevalent. Each type serves a different purpose and offers unique opportunities for investors. Futures contracts, for instance, are agreements to buy or sell an asset at a future date at a predetermined price, offering a way to hedge against price movements. Options provide the right, but not the obligation, to buy or sell an asset, giving investors flexibility. Swaps involve exchanging one set of cash flows for another, beneficial in managing financial risks. And forwards are similar to futures, but are private agreements between two parties, offering customization. Understanding these variations is like learning the rules of a complex, yet fascinating game where the ultimate goal is to strategize and optimize one's investment portfolio. With a firm grasp of what derivatives are, investors can navigate the market with a greater sense of purpose and direction. 2. What is derivative trading? Derivative trading is the art of buying and selling financial contracts that derive their value from something else, be it a stock, commodity, currency, or market index. Imagine stepping into a vast, bustling marketplace where instead of fruits and vegetables, the stalls are lined with possibilities and potential gains. This is the realm of derivative trading. It's a place where investors don't directly exchange the underlying assets, but trade contracts linked to those assets' future performance. It's like making a bet on the outcome of a game without actually playing in it. Traders use derivatives to hedge risk, speculate on future price movements, or gain access to assets or markets that would be otherwise out of reach. Each transaction is a calculated move, a step in a dance governed by market forces and informed predictions. It requires a keen understanding of the market, a strategic mindset, and, most importantly, an awareness of the inherent risks and rewards. By engaging in derivative trading, investors have the potential to magnify their gains, but they must navigate the waters carefully, armed with knowledge and a clear strategy. This is not just trading, it's a sophisticated financial ballet where each move is both a risk and an opportunity. 3. What are the uses of derivatives? Derivatives, the chameleons of the financial world, are not just complex contracts, but versatile tools in crafting investment strategies. Their utility lies in their flexibility, allowing investors to hedge against potential losses. Imagine setting up a safety net under a tightrope walker. This is the essence of hedging with derivatives. It provides a form of insurance against the unpredictable swings in the prices of underlying assets. Beyond risk management, derivatives are potent instruments for speculative endeavors. They empower investors to leverage insights into future market movements without the need to commit extensive capital upfront. This speculative aspect is akin to placing a well-reasoned wager on the future, harnessing volatility for potential gain. Furthermore, derivatives break down barriers to entry, enabling access to global markets and asset classes, that might be beyond reach due to regulatory, cost, or geographic limitations. They democratize investing, offering a platform where small-scale investors can participate alongside financial giants. Derivatives also serve as a means for price discovery, providing valuable signals about future market trends and asset values, helping to keep the market ecosystem balanced and informed. In essence, derivatives are not just financial contracts, they are navigational tools in the vast ocean of investment opportunities, steering investors through the waves of market uncertainty with precision and agility. 4. Who are the participants in the derivatives markets? The derivatives market is a dynamic stage where various players come together, each with their own roles and objectives. Among these are hedgers who seek to protect their investments from price volatility. Like prudent guardians of their treasures, they use derivatives as shields against the unpredictable swings of the market. Speculators, on the other hand, are the adventurers of the financial world. They dive into the derivatives market not to hedge, but to bet on future price movements, aiming to profit from these fluctuations. Their strategies hinge on forecasts and risk tolerance, embodying the essence of high-stakes gameplay. Institutional investors, including pension funds, mutual funds, and insurance companies, leverage derivatives to manage large portfolios, ensuring they meet their financial obligations and investment goals. Their participation adds depth and liquidity to the market, making it a more efficient and vibrant ecosystem. Lastly, we have the market makers and arbitrageurs, the masterminds of liquidity and balance. Market makers facilitate transactions, standing ready to buy or sell derivatives to ensure the market remains fluid. Arbitrageurs, with their keen eyes for price discrepancies, help keep the market efficient by exploiting differences in prices across different markets. Together, these participants weave a complex yet coherent tapestry of the derivatives market, each playing a pivotal role in its functionality and vibrancy. 5. Advantages of derivatives. Derivatives stand as the maestros of the financial orchestra, offering harmonious advantages to those who learn their rhythm. They provide a leverage playground where small margin deposits can control vast asset values, amplifying potential returns. Through precise risk management, derivatives allow investors to craft strategies that fit their risk appetite like a glove, enabling both protection and speculative prowess. Moreover, their versatility sings by offering access to a global repertoire of assets, broadening investment horizons. With derivatives, the financial markets become a canvas where the savvy investor can paint their path to diversification, managing risks and seizing opportunities with adept finesse. 6. Disadvantages of derivatives. While derivatives dance gracefully across the financial stage, offering myriad opportunities for the astute investor, they are not without their pitfalls. The complexity of these instruments can be a double-edged sword, creating a labyrinthine world that can easily ensnare the unwary or inexperienced. This complexity not only demands a high level of financial acumen, but also exposes investors to substantial risks, including market, credit, and liquidity risks. Market volatility can turn an expected profit into a significant loss in the blink of an eye, while credit risk looms when one party fails to fulfill their contractual obligations. Moreover, the leveraged nature of derivatives magnifies both gains and losses, making it a high-stakes environment that can rapidly erode capital. Liquidity risk also rears its head, particularly with over-the-counter OTC derivatives, which may not be as easily bought or sold as their exchange-traded counterparts. This can leave investors holding positions that cannot exit without considerable loss. Furthermore, the opaque nature of some derivatives markets can lead to a lack of transparency, obscuring the true extent of risks involved. Navigating the derivatives market, therefore, requires not just a map, but a compass, a deep understanding of both the opportunities and the risks involved. 7. How are derivative contracts linked to stock prices? In the intricate ballet of the financial markets, derivative contracts and stock prices perform a duet, moving in harmony yet dictated by distinct rhythms. Derivatives like options and futures are deeply intertwined with stock prices, their value a reflection of these foundational assets. As the sun influences the bloom of flowers, stock prices directly impact the valuation of derivatives. For instance, an options price is swayed by the underlying stock's fluctuations, riding the waves of market sentiment and economic indicators. Futures contracts, similarly, are bound to the future expectations of stock performance, painting a picture of anticipation and speculation. This linkage allows investors to employ strategies that can hedge against stock price movements, speculate on future changes, or even lock in prices for transactions yet to occur. The dance between derivatives and stock prices is one of precision strategy, where understanding the steps can lead to a performance worthy of acclaim. Through this symbiotic relationship, investors gain a powerful tool in the pursuit of portfolio optimization, leveraging the dynamics of stock prices to navigate the financial markets with confidence and creativity. 8. How to trade in derivatives market. Embarking on the journey of trading in the derivatives market is akin to entering a vast and intricate maze, filled with both treasures and traps. To navigate this labyrinth with skill, begin by arming yourself with knowledge. Understand the key types of derivatives, futures, options, swaps, and forwards, and how each operates. Next, choose a reputable broker, one who acts as your guide, offering access to the exchanges and valuable insights into market trends and strategies. Setting up a trading account is your gateway into the market. Here, decisiveness meets preparation. Develop a trading plan that aligns with your financial goals and risk tolerance. This plan is your map, guiding your steps through the complex pathways of the market. Embrace the practice of paper trading to hone your strategies without financial risk, a simulation that sharpens your instincts. When you're ready to trade, start small. The derivatives market's leverage can amplify gains, but remember, it also magnifies losses. Keep a keen eye on the market, continuously educating yourself on economic indicators, market trends, and potential signals for price movements. 9. What are the prerequisites to invest? Before stepping into the vibrant arena of derivative trading, one must lay the groundwork with essential prerequisites. First and foremost, a solid foundation of financial literacy is crucial. This doesn't mean you need to be an expert from the get-go, but a good understanding of basic financial concepts, market mechanics, and investment strategies is indispensable. It's akin to knowing the rules of the game before playing in the big league. Additionally, access to a reliable trading platform and a brokerage account tailored to derivatives trading are key logistical requirements. These tools are your instruments, enabling you to execute trades and navigate the market's ebbs and flows. Equally important is a well-defined investment strategy, thoughtfully aligned with your financial goals and risk tolerance. This strategy is your compass, guiding you through market uncertainties and helping to make informed decisions. Lastly, an essential prerequisite is the psychological readiness to face the market's inherent volatility. The world of derivatives is not for the faint-hearted. It demands resilience, patience, and an analytical mindset to turn challenges into opportunities. With these prerequisites in hand, you're set to embark on your investment journey in the derivatives market, poised to explore its depths with confidence and creativity. Time for the soft question. Are derivatives your cup of tea, and why would you not invest in them? Please share your thoughts in the comment section below. This will help everyone learn and grow together. Subscribe with us and learn. If you find the information in this video valuable, please subscribe and share it with family and friends. Your support will help us create many more high-quality videos like this. Please support us. Please hit the like button and the notification bell to be notified. Click on these 2 videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.